Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Welcome to the U.S. Markets Wrap. A mixed picture in the markets today. The S&P 500 posted a modest gain as traders assess the potential for future Fed rate cuts amid persistent inflationary pressures. The broad market index added 0.2%, closing at 5,918. The Nasdaq Composite slipped 0.06%, pretty marginal, to 19,478. While the Dow Jones Industrial Average outperformed, rising 0.25% to close at 42,635. All three major averages on pace for a second straight weekly loss. Now, for more insights, we're joined by Ben Emons, Chief Investment Officer at FedWatch Advisors. Ben, welcome back to the show.
Good morning. Thank you for having me.
Thank you for coming on. Let's first touch on bond yields, shall we, which have been climbing on bets that President-elect Donald Trump's tariff and tax plans could lead to a spike in inflation. Now, they seem to have wavered in this latest session. Could you help us describe what's going on there?
Yeah, there's several things happening already as going into the Trump administration. The economy shows all the signs of acceleration because really the Federal Reserve having lowered rates in the fall, in addition to just the economy itself not really being in any kind of recession, led to more acceleration. And then the markets is anticipating that whatever the Trump administration can achieve this year, which is particularly corporate tax cuts and income tax cuts, and deregulation, quite likely on the banking side, that in itself already be significant stimulus against whatever we can expect from tariffs, which will likely be announced right after the inauguration. Now, markets are still assessing this as a very positive economic outcome, right? In fact, it's really the hallmark of the Trump administration is trying to drive growth higher, faster, and that's what bond yields, I think, are particularly reflecting that aspect. Higher GDP in the United States.
Now, across the Atlantic, in the UK, the bond market is ablaze as traders have lost faith in the fiscal rules. Can we draw any parallels there with regards to whether uncertainty in the Gilts remains a blueprint for the U.S. debt ceiling?
Yeah, in my view it is, and thank you for quoting the note, because what's happening there is that they obviously have a weak economy and they have to make decisions about bringing the budget deficit down. And that's weakening the pound sterling, and that has led to pressure on gilt yields. Now, we may not have the dynamic similar in the United States. If the dollar were to weaken, it doesn't necessarily mean that treasury yields will go higher. But it is a blueprint in terms of the decisions that have to be made around this deficit, because we have a very large deficit too. And that's not that simple. Already you've seen the headlines out of Elon Musk sort of walking back the Doge project of like, well, it may not be as much as $2 trillion, right? Because that is a big number if they have to decide to actually cut down that spending that much, because it's going to impact the economy. So there's uncertainty about how to deal with the deficit and how to deal with the debt ceiling. And that could indeed lead to a spike in treasury yields, just like we're seeing with UK gilts that are reacting to, well, this government doesn't have much room anymore here to do anything. It has to probably do things that are not good for the economy and may even stoke inflation. And as a result, those yields go up, right? So it's that dynamic that's happening there that could also happen in U.S. markets.
All right, let's move on to talk about tech. You mentioned Mr. Musk. The share price forecast for Tesla presents a mixed picture, analysts offering a wide range of predictions. We saw Palantir plummeting this week. Do you think tech stocks, Ben, will continue to edge higher in 2025 after hitting record highs in 2024?
Yeah. It could well be, because look, these are companies with excessive, really extraordinary growth rate for earnings, and it doesn't look like that's tapering off, because just among themselves, they're spending on AI, right? So as Microsoft announced $80 billion of spending on AI, the NVIDIA rallies on that, and as NVIDIA rallies, it affects AMD, right? And as AMD rallies, it may affect also, say, Tesla, right? So it's all connected with one another. But just on that basis itself, I think tech stocks will remain in the leadership of the market. But then it's about safety and about, if we are in a year where, as much as people are very optimistic about the U.S. economy and all that, we are dealing with uncertainty, and it could become significant, particularly if we're going to get this new trade policy rolled out, and how will global markets and economies really react to that, and how will it all play out. But in that type of environment, what do people do? They probably go to the highest growth companies, which are the tech companies. So, it reminds me a bit of 2015, that sort of year when it was also very uncertain. The tech stocks outperformed that year. Nasdaq was actually up 7%. So I think we're looking at something similar here, even though the start of this year shows, interestingly, some rotation in the unloved sectors from last year, which are, for example, energy and healthcare materials. But I think those are not going to grab the leadership as much as the tech sector will.
Yeah, exactly. And now we move on to talk about the tech bellwether stock, which is NVIDIA. Now, attention this week has been on CES. What's your reading of how the markets reacted to NVIDIA CEO Jensen Huang's speech and the focus on robotics, autonomous driving, or the, quote, physical AI?
And that's an important word, physical AI, because year to date now, if you look at the breakdown of the S&P index by sector, what's really up there is semiconductor equipment and electronics and copper, right? And that's all physical material, right, to get this AI further implemented into the economy. There's not just through data centers, but just basically all the inputs that you need to make AI actually work, really, right? All the spending that happens. So it was an important speech from that perspective that, if they're going to focus on more physical aspects of AI through robotics, through autonomous driving, then you're talking about the real economy. You talk about output. And I think that's how markets reacted to it, was that bond yields went up in response to Jensen's speech on that particular aspect, the physical AI, whereas some of the other things that he highlighted about the chips and the developments they're doing, or the super PC that they're developing, that's a little bit more the competition with, let's say, an Apple and Microsoft in that perspective, right? It's a little less. I think it was really the physical AI, and then obviously announcing that an A&D in this case will be the main key supplier, right? Which that too had a spillover to the semiconductor index, and that's still the leader of the market. That's still driving markets higher.
Ben, before we wrap, I just want to know what is on your watch list for this year. Bulls versus the Bears, which side are you on?
Yeah, I do remain on the bull side. I don't think there's a real bear case. There may be this correction that could happen. Right? That's because we've been rallied so much. I guess that's maybe for technical reasons. But there's little that stands in the way of the economy growing faster because of the way the Trump administration is positioning itself and the support that it's getting from Congress, which is very important in that aspect. But what is uncertain is that debt ceiling and how we deal with the deficit. That will make it, to an extent, a bit of the pullback bear case against that bullish, outlook. I do think, though, that we'll end up with markets this year again higher than we did last year. So an S&P going to 7,000, for example, very likely.
Well, since you favor the Bulls, I wish you all the best as you charge forward into the remainder of the year. Ben Emons, Chief Investment Officer, FedWatch Advisors, thank you for your time.
Thank you very much.
All right, have a great weekend, Ben. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.